What's up YouTube, and welcome to another personal finance video where I'm talking about things like the stock market, things like gold and silver, precious metals more generally, a bunch of other assets, debt, income, passive income, all that good stuff. Thanks so much for joining me. If you haven't done so already, please subscribe to this channel, like this video, and check out my website, My Road to Wealth and Freedom, where I'm always publishing cool articles if you guys are into the personal finance stuff. Quick disclaimer, guys, I'm not a financial advisor, so please do your own research, consult a financial advisor before making any investment decisions like buying things like gold and silver, buying stocks, investing in real estate, whatever. Okay, guys, today's a little bit of a special video. I've just been doing some reflection on investing in 2020. I know it's been a crazy year for so many people. A lot of just average everyday investors. Some have done quite well. Some have done quite poorly. And I just want to kind of get in and talk about like some of the real challenges about investing in 2020, and more particularly, I guess, investing going forward when we're kind of looking into the future here. These are some things that that I've been thinking about a lot lately, because well, I've done pretty well this year. I could have done a lot better, and I'm just sort of reflecting on my own personal kind of investing mistakes. You know, buying the dip too soon. You know, with my oil stocks and with some of my other stocks back in March. You know, I felt like I didn't buy in at the bottom or off the bottom. I know timing is always a thing, and that's, you know, it's nearly impossible to time, but, you know, I could have done a lot better had I waited to buy in March and waited to buy in September with like my oil stocks and that. And then, like, you know, selling too soon. Sometimes the market goes up and then you sell and then it just jumps like what we saw in November. You know, I don't want to like, you know, complain, because I feel like I've done pretty well, but, you know, there's always, as an investor, any sort of, when you're making decisions with your own money, you have to take the time to reflect on your mistakes, on your successes, you know, your approach to investing, your strategy, what you can do better next time. And, you know, since 2009, I've been waiting for a big stock market crash. I thought, you know, hey, given my experience of like the last 10, 12, 15 years, whatever, you know, I can really kind of, you know, take the bull by the horns and get out in front and get ahead. To a degree that happened, but to a degree it also did not happen this year. And this year was, and I'm sure a lot of you are feeling that too. It's just a lot of things kind of happened this year. And it's caused a lot of people, a lot of smart people too, you know, they kind of missed the boat too. Like guys like Warren Buffett, Stan Druckenmiller, you know, these guys were saying we're going to basically have a depression and stuff like that. And of course that didn't happen yet. So we just had so many different things happen. I just want to kind of unpack some of these things, some of the things that I'm thinking about going forward into 2021 and beyond. Because I feel like right now the entire world is at this kind of precipice. We're on this precipice. Something big is going to happen out there in the future. I don't know what, but these are just some sort of thoughts, themes that I keep hearing a lot about. Some of it is in the financial media. A lot of it is not, because, you know, the elites, those in power, they rarely let the little guy know what's going on behind the scenes and stuff like that. But these are just some things that some themes, some narratives, if you will, that we should all sort of be thinking about as we head into this decade. Okay, the first thing I wanted to mention is the first big narrative is deflation. Deflation has been hanging over this market ever since the big crash in March. beyond that, there are some deflationary forces at work. The first thing is, I was listening to this podcast, I forget, Jeff Booth, that's the guy's name. He has a very, very interesting, he wrote a book on this too, a very, very interesting idea that technology is deflationary. And that, we're going to have to start considering like universal basic income, because as we move forward into this decade, things like advanced robotics, AI, these crazy software programs, they're just going to kind of take out more and more jobs. The basic thesis is that the first wave of technology kind of took out the blue collar worker. I used to work at an auto plant. We used to have these welding machines, these robots that did like the welding, robots that moved, these pieces of steel and stuff like that. Well, now, before the robots were in there, it was people, either using like a forklift or actual welders welding, so the first wave took out the blue collar jobs. This is your assembly line thing, manufacturing. Alongside of that is basically globalization and the outsourcing of, menial labor tasks and stuff like that. So all our cheap stuff got outsourced to Asia and whatever. And so that's deflationary. The next thing is, and the next point that these deflationary guys make, and these are all valid points. I just want to add, like, I'm not taking a stance on any one of them because I've honestly wrestled with this for the past year. And I'm sure some of you guys have too. But the other major point that they have is that there is this demographic shift happening. The baby boom generation is retiring or already retired. They are embarking on their peak drawdown years where they're eating up all of that social security. They are selling things like their stocks and bonds to live. They are downsizing their homes. All of these forces are at work. So just on the financial asset piece, the idea is that, okay, well, all these baby boomers have basically spent the last 30, 40 years acquiring assets, building their investment accounts, their retirement accounts, stuffing it with mutual funds and individual stocks. And now they're going to start selling those things. And that will cause the markets to go down. And then you have this counter argument that says, no, wait. The millennials are going to step in and purchase those stocks. Kind of like what we saw in March, right? We saw the big sell-off, and then we saw the Robinhood crowd and all the sports gambling people jump into the stock market. All right, well, there's a problem with that. I'm sure anybody can see a mile away. Number one, let me just put the gambling thing to rest. Does it make any of you feel great to know that the reason why the stock market is going up so much and that we should have faith in it is because all sports are canceled and no one can gamble on sports. So now all those people are gambling on the stock market. Like, that to me is just ridiculous that people would even use that as justification for this market having steam. It's completely insane. If anything, I would be hitting the sell button, and I did. I sold. But beyond that, let's talk about the millennials. Okay, so the millennials, they entered the workforce in the last big financial crisis. They have been, for the most part, not all of them, but a good portion of them, have had to contend with things like high student loan debt. They haven't been able to get good paying jobs. That's the whole, like, you're 30 in your mom's basement type thing. There's a whole bunch of reasons why that may have come to pass. Structural changes in employment and whatever. They're saddled with debt from degrees that the market no longer values or needs or wants. Yeah, so that is that's another piece. I just don't buy. And not only that, let's face it, homes are at record high prices. If you're a millennial and you bought a home for, like, I think the average home, I don't know how much it's gone up, but depending on where you live, the average home could be, $300,000, $500,000, $1 million. Like, these millennials, if they did buy a home, they're contending with record high home prices. So that doesn't really leave a whole lot in the budget to go buy up all their mom and dad's stocks that they're selling. So I don't quite believe that. The next thing is, we're going to see this huge transfer of wealth from the boomer generation to basically everybody else as they, die off and will all their money to their kids type thing. Okay, I'm not 100% on that either. I don't really believe that. First of all, most people's retirement finances are in complete shambles. I don't see a lot of rich boomers walking around. I do see a lot who are very concerned about, the high prices for renting, the high prices for their homes and stuff. If you sold your house for a record high price, you downsized into a record high price. So still, it doesn't leave a lot of wiggle room in the budget. So that's the kind of deflationary thing. In a deflationary situation, that's basically when the asset bubbles pop. You're going to want probably to own things things like real estate would crash, stocks would go down, precious metals like gold, silver, they would all go to, commodities would all go down. Just there's absolute demand destruction. And in that situation, debt is a real killer. Things like bonds, things like cash are king, at least initially. And that's the thing. Deflation is really, really destructive because it's like entire segments of the economy, they're just not coming back. Bankruptcy takes them away forever. And how many people we are in an age of record high debt. No other time has there been this much debt in the world. And that's the other thing. By the way, guys, all of these narratives, they are global in nature. It's not US, North America, European, Australian, Japan, China. It's worldwide. We're in this situation as a globe, which is also new. I can't stress that enough. Usually, when one region of the world was doing poorly, other regions did well. Maybe in North America's down, but Europe's doing okay, or Asia's down and North America's fine. That's how it used to be. Well, we're so interconnected now, and as we saw in the financial crisis, all it takes, if there's a problem in one area of the world, one bank goes down, it can take the whole system down. So we're no longer in an area. So I really kind of question, if you own stocks, are you diversified? If you own US stocks, European stocks, Asian stocks, I don't really quite buy it, because a problem in any one of those areas is enough to sink all the other areas. So, sure, it might be worse in emerging markets than in the S&P 500 or, in Europe than in China or something like that. But the pain will be spread all over nonetheless, regardless what happens. So yeah, in that area, in a deflationary scenario, if you have debt, you really want to not have any debt. And that includes like your mortgage. A lot of people lost their homes in the Depression. Yeah, it just was not a good thing. So that's a big theme. The other problem is we've kind of had the last 25 years of wage deflation or stagnation. And, that's a bit of an issue. If your wages aren't keeping up with the cost of living, because we all know the CPI numbers are just BS. Every year, my cost of living rises. My property taxes go up. My insurances, those go up. The cost of food goes up. Electricity, gas, you name it, it all goes up. Insurance, the whole nine, right? So we are seeing subtle inflation. Massive inflation if you look at things like assets, like houses and stuff like that. Even cars, massive inflation in vehicles too. Anyway, so that's the thing. Holding cash, I feel like it's a problem because we have currency devaluation. We have endless money printing. That's a huge issue. And even if we get deflation, I'm not so sure that our cash will truly protect us. That said, when deflation hit and during the Depression, Things like gold and silver went down, but they did kind of bounce back. We started to get like the reflationary trade going forward, I guess. So gold usually takes a hit and then it kind of bounces back, or at least maybe won't go down as much as other things because it has intrinsic value. So I just want to move on. That's one of the things I've been thinking about. So how do I invest? Well, I'm looking at it like this. If we are headed for deflation, then what I want to do is basically cash out of my stocks and basically pay my mortgage off. You know, have a little bit of cash reserves to weather that storm. So that's just kind of what I'm thinking for my own personal finance situation. You know, I do have a mortgage, like many of you, I'm sure. You don't want to be holding on a lot of debt, especially in a deflationary situation. The next narrative I want to talk about is about the inflation narrative. And that's what's really gaining steam now. That's what everyone's going on about. I saw an article on CNBC last night. There's inflation in Europe. They're seeing some inflation there. So let's talk about that part. Because of endless money printing, they've devalued the currency and they're printing money. Money is just everywhere. We're gonna, once these lockdowns end, we're gonna see the economy just surge back to life. And there's gonna be huge demand, but not a lot of supply. But we will have lots of dollars chasing very few products. So we're going to see lots of inflation. The problem in an inflationary scenario is all of the inflation that we've seen is basically all money printing, and the average person's wages really, I don't believe, are going to keep up, because like we said in the deflation thing, technology, globalization, that has been deflationary, and those trends are here to stay. So it's not like we're going to start paying people a lot more money to do their jobs. So I do feel like in an inflation situation, even though your wages might go up modestly, we might be in a high inflation or hyperinflation type of situation where wages just simply can't keep up. In that situation, of course, cash is trash. You do not want to touch that thing. It's the hot potato. You want to get rid of it as soon as you get it. Go buy some apples, go buy corn, go buy oil, go buy gold, go buy anything, real estate, whatever. You just do not want to hold cash. You want real assets that will keep pace with inflation. Things like stocks will do quite well. Real estate, you know, gold and commodities. And that in the inflation scenario, bonds would get basically killed. Now the risk to that inflation story is that central banks will feel obligated to get out and fight it, which means they would increase interest rates. The second they start increasing interest rates, all of the asset bubbles will pop, and we will end up in that deflationary scenario that I just described earlier. So we're really kind of in this catch-22 of inflation versus deflation, and the central banks have chose just to basically keep pumping the system, hang on as long as we possibly can to this system before it completely collapses. Now, there is chatter and talk about, you know, maybe a third way, and that would be to build a parallel system to our current financial system and slowly move people over. Or, you know, this is where you get that new great reset. This is where, you know, some of these Bitcoin proponents, they talk about how Bitcoin could be a part of that new system. And I mean, I don't know, bottom line, but these are just some things, like I said at the outset of this video, these are some things that I've been wrestling with all year long, because clearly how you approach investing will be very, very different under these two competing and diametrically opposed scenarios. You know, if you're investing in expectation of a deflationary scenario, you are buying and doing very, very different things. You're paying off debt. You are holding cash. You're maybe trying to get into some alternative assets like Bitcoin and stuff like that. You're doing all kinds of different things than you would otherwise, right? If you expect we're going to get massive inflation, then you're going to want to see things like gold and silver. You're going to want to be heavy into the commodities. You're going to want to be in real estate. You're going to want to be in things that are going to benefit from this massive inflation. And then there's the wild cards. Like, we don't know what central banks will do. Will they come out and decide, hey, whoa, inflation's getting completely out of hand. We got to rein this stuff in. We're going to start raising rates, and we might have to do so aggressively. And then which would lead to a crash of the whole system. And then we're back in the deflation camp. Like, so this is the kind of catch-22 that I really see as in going forward, and that I myself have really struggled. I'm sure many of you have too. Like, where is this all going? It's not enough to say just buy gold and silver and hide under a rock. You know, my own view is that I am diversified, although I don't hold bonds. I do have cash, stocks, real estate, and precious metals, and I guess commodity stocks too, like oil and that type of thing. But that's been my approach. I'm kind of thinking about maybe taking some money off the table, maybe paying a bit down on my debt. Actually, I don't have debt other than mortgage debt, so that's what I'm talking about. I would basically pay down a big lump sum on my mortgage. I don't know, my mortgage rate's what, 3%, but it's a risk-free 3%. And then someday those payments end, and then we have massive cash flow. That's the kind of Dave Ramsey kind of approach, right? He's always preaching, pay off your home, pay off your home. You know, he might have a point, right? Like, if you don't want to lose your home and be destitute, your home is really not an investment. It's basically where you live, and you need to have a roof over your head, especially if you have a family. And so there's a million and one reasons to pay off your home, basically what I'm saying. It's not the sexy thing to do. It's not buy gold, buy silver, invest in Bitcoin, or, you know, buy this hot stock or whatever. But, you know, from a personal finance perspective, from a cash flow, I would have a crazy amount of cash flow if I did that. It's one of the things that I'm kind of thinking about. Now, there is a wild card to all of this. In addition to central banks deciding to just, you know, start raising interest rates, which they really can't, otherwise they pop the bubble. I think everyone pretty well sees that coming. The other thing is what governments might just do. Like, there's a lot of talk about a wealth tax. And I know a lot of people, a lot of you out there might be thinking, yeah, well, I'm not like super rich, so it's not going to really impact me. Well, the wealth tax is really going to be on people, on the owners of assets of any type. You don't have to be rich. If you own a home, you're paying a mortgage on it, then that wealth tax may affect you. You might be taxed at the end of the year. You do your annual income tax return, and you know, it might say, you know, what is the value of your home, or what is the purchase price of your home? You know, what year did you buy it in? You know, oh, okay, well, we're just going to levy, you know, a small percentage of tax on that. What is the value of your investment accounts? You know, maybe your retirement account did really well that year, and we're going to charge 1% or something like that. That's how this stuff can go down. Because make no mistake about it, governments have spent an enormous amount of money, not just on the whole pandemic spending plan and that, but they've spent that on for the last 10 years. They have been printing money, low rates, just endless issuance of bonds and debt and notes and treasuries and all that stuff. That all has to be repaid or just inflated away, or possibly revalued under a new system. Or maybe it's a mix of all three. So these are all threats to the average investor. This is not just, I feel like people think, you know, wealth, oh, it's a rich person's problem. This is not, these things are not going to really get the wealthy. You know, they can afford to move their assets offshore. They can do a whole bunch of different things. Look what's happening in California. People are moving out to Texas, and everyone's abandoning ship. You know, the wealthy can move their money and get it out of certain tax jurisdictions. That's what we saw a few years back in the Panama Papers, right? What I'm talking about here is it's just everyday people. If you own a home, then you are wealthy. That's what the government is saying. If you own investments, then you are wealthy. You don't feel well. I don't feel wealthy. I have a net worth, a real net worth, I guess, of probably like over 2 million. Do I feel wealthy? No. Do I feel like I can just say, take my job and shove it? Hell no. You know, I work, I pay bills, I need income. I try to build sources of passive income. You know, am I better off than a lot of people? Sure. But by no means do I consider myself rich. I drive an average car. I have, you know, an average or decent, you know, home. You know, I have probably an above average collection of financial assets and probably things like gold and silver versus other people, simply because I've saved in my butt off the past 10, 12, 15 years. I've invested hard from day one because I knew enough that if you get a half decent job, you don't have kids or responsibilities or any of the big life money things, then you need to invest as much as you can, as young as you can, because the power of compounding will just basically carry the day. And let me tell you, I haven't been able to save and invest as much as I'd like to the past few years. And I've really noticed, like, it's like my investments, it's almost like an unstoppable machine. That's why I really like advocate invest as much as you can, as early as you can. And anyway, and you'll do well in the long run. You know, 10, 12, 15 years, which seems like an eternity when you're like 25. But when you're 40, you're going to be thanking your 25-year-old self that you sucked away all that money. You denied yourself that big screen TV or that super fancy vacation. And you really took saving and investing seriously so that you wouldn't have to save as much down the road. But anyways, guys, those are my thoughts going into 2021. And like I said, I'm on the fence. I have some cash. I still have my stocks. My oil stocks have done phenomenally well. I know, you know, a month and a half ago, I was like, oh, to no end, week after week, they were just going down and down and down. Now it's like every day they're up and up and up. It just goes to show you it's hard to invest when things are unloved. And now basically my thoughts are turning towards selling. At what point, you know, I kind of had an idea of where I wanted to sell these things. We're still below where that is, but that's something I'll be watching, especially as the economy improves going forward. So anyways, I know I went on quite long on this video, but it's a lot of stuff that I really been wrestling with myself, and I'm sure many of you have. I've been watching tons of YouTube videos, reading tons of articles from gold guys, from bond guys, from Bitcoin guys, from, you know, the deflation people, the inflation people, the great reset people, basically everything. And stocks, sure, like tons of stuff about the stock market and individual sectors and that, and just lots of economists. And that's kind of how I see things. And that's kind of what I'm thinking about going into 2021. I wish you all the best. Good luck investing. If you haven't done so already, like this video, subscribe to my channel. Please check out my website, My Road to Wealth and Freedom. I got lots of great stuff coming up there. You can check out my net worth and passive income reports and maybe start building your own. Thanks so much, guys. Take care.